In the previous video, we saw how you need to invest in order to beat inflation and to be able to fulfill your goals, dreams, and aspirations. The choice of financial products at your disposal, which claim to offer you great returns at minimal risk, is mind-boggling. Add to that an array of brochures which try to inform you of these options but only end up confusing you a little more. And you will soon be rethinking your decision to invest. However, it really isn't as complex as it seems. You could make your money make much more money without the risk if you simply understood it better. The single greatest factor in growing your investment is the rate of return, ROR, you get on your investment. Generally, the highest returns are offered by investments that are the most risky. There are, however, ways to minimize your risk while maximizing your rate of return, ROR, but more on that later. For starters, let's see what investment avenues are open to you as a retail investor and understand them better. Here's a quick look at all of the options available to you. Some of these we will explain to you in detail. The fixed deposit. A fixed deposit or FD gives you a return of around 8.5% on your investment, depending on the bank and the period of investment. This is why it is a popular and safe investment alternative, as all banks operate under the guidelines of the RBI. The minimum tenure of an FD is 15 days, and the maximum tenure is 5 years and above. Senior citizens are entitled to an exclusive rate of interest for FDs. FDs are a safe choice, but not necessarily a smart one. The returns are low and could vary anywhere between 7 and 9.5%. This means that FDs provide no protection against inflation. So, the money in your fixed deposit is in fact not earning you any money at all. Insurance policies. Insurance is also considered a good investment alternative as it offers services to protect your life, assets, and money while being tax deductible. The Indian insurance market offers various options with reasonably priced premiums. Some of the popular insurance policies in India are life insurance policies, health insurance policies, and car insurance policies. Insurance policies are certainly a wise choice, but do not look at them as a means of earning more money. They tend to have low rates of return, which are never able to counter the effect of inflation. Public Provident Fund (PPF). Like the NSC, the Public Provident Fund (PPF) is also supported by the Indian government. A minimum of Rs 500 and a maximum of Rs 1 lakh is required to be deposited in a financial year. You can create a PPF account in a GPO or head post office or in any of the nationalized bank branches and avail yourself of an income tax deduction of up to 1 lakh rupees. The 8.6% rate of interest of PPF is evaluated yearly with a lock-in tenure of a maximum of 15 years. It allows for tax rebate but has a low return which is unable to counter inflation. Mutual funds. A mutual fund is a trust that pools the savings of a number of investors who share a common financial goal and invests it in different assets. It then issues units to the investors, which represent an equitable right in the returns generated by these assets. So, much like the stock market, mutual fund investments are also open to market risks. Depending on the objective of the funds, like long-term growth and low risk factor, or high income growth with high risk factor, or low growth rate and stability of principal, the fund manager invests in respective fields on behalf of you as shareholders. For individual investors, it is a simple type of investment because someone else manages the funds. takes care of accounts and invests money over many different available securities. However, a word of caution is necessary here. The performance of mutual funds may not have been as impressive as it seems over the years, so analyzing it is important. Stock market. This is the option that will bring you the closest to achieving your goals, aspirations, and dreams while beating inflation. This is because investing in the share market yields higher profits. Influenced by the unanticipated turn of market events, the stock market to some extent is not considered the safest of investment options. But it's worth exercising this option for its high profits if you know how to minimize the risk. This you can do by updating yourself on recent stock market news and events. All you need to begin is a trading and demat account. Many banks and private agencies offer this service. Choosing the company from which to buy shares is important. This may not be an easy task, as there are over 5,000 companies listed in the BSE, Bombay Stock Exchange, and NSE, National Stock Exchange. Our other videos on the subject will explain this in detail. Now that you know all about the options available to you, you need to assess your risk and return appetite. And that's exactly what we are going to help you do in our next video.